Good everyone, let's hear from BG Trading. Hope you are well. Today's 29th of August 2023 and I'm going to be analyzing ZIP and Tyro, two stocks, two companies that have actually just released its FY23 full financial year reports for the year 2023, and we want to take a look what's happening, what are the outlook for those two stocks, and whether we should be buying now or just holding or even selling those stocks if we holding at all. So let's have a look. I just want to remind you, this is not a financial advice, just as from BG Trading, sharing with you how we apply our strategies to know when to buy and when to sell stocks, how we set up targets, how we look into fundamentals to make better decisions, and much more. So if you like the way we trade, please subscribe to the channel, and also like to invite you right now to become part of our free Facebook community. We call that Buy and Grow Sell Strategy for Share Traders. I'll be putting the details right at this description below. So if you've been following us long enough, you know that we've been trading ZIP. ZIP has been incredibly profitable for us back in 2020, 2022, and obviously this year was trying to pick up where would be a turnaround of this particular company, the stock price, but it kept going down. Obviously, we got that wrong, and then we've been waiting for this financial report to be issued, so we could have a solid confirmation of what really this company is, whether it's turning around or going to be flat for a while. And my particular opinion, this is a preliminary analysis which I looked earlier today, is that ZIP net loss came around $400 million, which that was in line to our expectation, which means about 60% improvement from last year, which is a very good improvement. However, the key metric that really puts me down was the transaction growth. The revenue growth was only about 16%, and for a growth stock like ZIP, we were expecting about 50 to 80% growth, and that did not happen, unfortunately. So they have actually a very soft second half of FY23, and that put us into a position that wonder what's going to be in FY24. If that replicates into FY24, even though they're cutting costs, they're not going to go anywhere in terms of net profitability. Only a profitable EBITDA is not enough. It needs to be net profit as a group, as a company, and doesn't look like it's going to happen to FY24, and potentially not even in FY25. The only key metric here, which is a macroeconomic metric for ZIP at the moment, would be if interest rates cut really happens some stage early next year. But still, even if it happens early next year, we probably won't have a effective effect on the share, on a fundamental side of the company, because that will only reflect in the following year. Now, regarding the share price formation, ZIP has sort of broke out most of the hypothetical support levels. Yeah, and unfortunately it's keep falling, and I don't think this is a good enough result to have a huge bounce, the bounce that we've been looking for in terms of recover for the share price at this stage. So we are out of the stock. We decide not to be touching for a while until we see a solid macroeconomic reversal and potentially Fed start easing interest rates, which didn't happen so far. We also got disappointed by Appen results yesterday, but we managed to get out at the open at $2, so we save ourselves to lose about 20% during the day, which was a great strategy using stop loss right there. So ZIP for us is not longer a opportunity. Even CESO has been reporting a better than ZIP with better growth, and that's frustrating from the growth perspective. A growth stock like ZIP needs to have growth rate year on year at least 50% or more. Even if it was about 40 to 50%, wouldn't be that bad, but that is too little for us, and I don't think I will back up this stock at the moment. And yeah, so out of that now, so let's jump to Tyro. Tyro has, on the other hand, had reported a net profitability, which is very, very positive. That's exactly what we were expecting, to be net profitable. We didn't expect to be that profitable. I think the company reported about $4 million net profit after tax. If you go to the financial performance, you can see how net profit after statutory net profit after tax about $6 million, so which is great, a fantastic improvement from $29 million loss to $6 million profit, net profit after tax. That's exactly what we're looking at into a growth stock like Tyro. So become profitable, not EBITDA profitability. We're talking about statutory, like the whole group to really become profitable. The only thing you gotta be careful, but it still, I think, will be won't be as bad as could be, is the outlook for FY24. Outlook for FY24. They claim to had a very slow first quarter of FY24, but if you look into still hospitality up about 8% of transactions, health, this is good because Tyro has recently got into a health sector, and 28.9% increase into that particular sector in terms of transaction. And I think that is the insurance for Tyro in a potential recession if that happens. So health expenditure will still occur across the board. Then Bendigo, powered by Tyro, down 9% in the first quarter, but services and others up by 12%. So I think we'll be in line with, or even improve a little bit in FY24. So, and therefore the gross profit will keep increasing as well. I think now this is the true turnaround of Tyro, and this is a confirmation, it's not a speculation. This is exactly what we wanted to look at into a fundamental result for a company. For me, Tyro is definitely a buy. And let's take a look at the chart formation for Tyro right now. Tyro is trading at technically discounted price, offering a very interesting entry at the moment. Not sure how much is gonna go up once the market sees this result and the market's open, but I think there is a great chance here for us to be able to capitalize about 20 to 30%, even more, if once the stock price settles and the market start pricing this positive result right now. I'd much rather be sitting in a company that has confirmed a profitability across the board than a company that we speculate is going to be profitable and obviously it's not even delivering a growth year on year that we expect for a growth stock. Another thing I want to just highlight here for Tyro again is the revenue growth in comparison to Zip. Zip revenue growth was about 16%, and Tyro revenue growth was about 31% year on year. So 31.5% year on year revenue growth is excellent growth for a growth stock into this particular sector. Remember that Tyro is not a direct comparable with Zip. It's completely different business model. Tyro has a much better margin. Zip is just buy now pay later. Tyro has a banking license. It's lend money for small business as well, and has other banking services, something that Zip doesn't have. So I'm not comparing side by side. I'm just sharing those two particular companies because they are stocks that we have been interested for a while, and then we wanted to have you guys to have a deep understanding what's exactly those two particular companies' fundamental values are. Obviously, the reports are there. This was high-level analysis, so if you want to look deep, go to the report. We'll be issuing potentially a stock analysis based on this report for Tyro for our VIP members, but I don't think we're going to do for Zip because we are not longer interested on Zip at this stage. Thank you very much, guys, and I'll see you next video. Bye.